Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 31st, 2025, and we're diving into the second quarter earnings report of Bristol Myers Squibb. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Bristol Myers Squibb has just released their Q2 2025 financial results, and there's a lot to unpack, from revenue growth to strategic partnerships. Let's get started.
Revenue and profitability overview. Let's start with the top line. Bristol Myers Squibb reported total revenues of $12.3 billion for the second quarter, with their growth portfolio contributing significantly. John, can you elaborate on these figures?
Absolutely. The growth portfolio, which includes key products like Opdivo and Reblozyl, saw an 18% increase in revenue, reaching $6.6 billion. This growth was primarily driven by their immuno-oncology portfolio and new product launches. However, the legacy portfolio faced a 14% decline, mainly due to generic competition and changes in U.S. Medicare Part D.
And how did they perform in terms of earnings per share?
They reported an adjusted EPS of $1.46, which is a significant beat against the forecasted $1.13 from 11 analysts. This indicates strong operational performance and effective cost management.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Bristol Myers Squibb has reported a slight decrease in gross margin. What are the key factors here, John?
The gross margin decreased to 72.5% on a GAAP basis, primarily due to product mix changes. However, they have managed to reduce selling, general, and administrative expenses by 11% thanks to their strategic productivity initiatives. This has helped them maintain a strong bottom line.
And what about their future outlook?
They've raised their 2025 revenue guidance to a range of $46.5 billion to $47.5 billion, reflecting confidence in their growth portfolio and strategic partnerships. This is a positive sign for investors looking at long-term growth potential.
Strategic partnerships and pipeline developments. John, Bristol Myers Squibb has been active in forming strategic partnerships. Can you tell us more about their recent collaborations?
Certainly. They've entered into a strategic partnership with BioNTech, which has impacted their EPS by 57 cents this quarter. Additionally, they've launched a new biopharmaceutical company with Bain Capital, focusing on autoimmune diseases, backed by a $300 million financing commitment. These moves are aimed at expanding their pipeline and enhancing long-term growth.
How do these partnerships affect their pipeline?
These collaborations are crucial for pipeline expansion. They have multiple new drug applications under review, which could significantly boost their product offerings and market position in the coming years.
Key takeaways. In summary, Bristol Myers Squibb has delivered a strong performance this quarter, with impressive revenue growth and strategic initiatives paving the way for future success. John, any final thoughts?
Bristol Myers Squibb is well positioned for long-term growth, thanks to their robust growth portfolio and strategic partnerships. Investors should keep an eye on their pipeline developments and market expansion efforts.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Bristol Myers Squibb's performance in the comments below.